Okay, good morning, everybody. I think we're about half a minute early, but I don't think that's everybody's here that we're expecting. Am I legally allowed to do that? I think that's okay. Thank you very much. Okay, welcome everybody. Some old, and I'm not referring to age, and new faces. Welcome to the Pension Fund Committee. My name's Eric Kerry. I'm the chairman of the committee. And just remind members that the meeting is being broadcast live with some guests attending remotely. So please make sure that your microphones are switched on when speaking, everybody. And I think it helps to switch them off when you're not, so we don't get any feedback or, in the recording or whatever. Okay. Item number one, I'll move swiftly on then, is to note the appointment of the County Council on the 27th of May 2021 of Councillor Eric Kerry as Chairman of the Committee and Councillor Andre Camilleri of Vice Chairman. Can I ask members to indicate by a show of hands their support for noting this appointment, please? Okay, thank you. That's carried. Moving on to item number two. This report names the committee members who have been appointed by each political group, as well as our non-voting members that are listed from Nottinghamshire County Council, etc. However, there's an error on the papers where it says that three of our members from the City Council are shown as not Nottinghamshire County Council. I do apologise. We have corrected it. Okay. I can't hear you without your microphone, Graham. We were hoping to convert you, Graham. Okay, so it also sets out the terms of reference to the committee, which were also agreed at the council meeting on the 27th of May. So I move the recommendation that the committee's membership and terms of reference are noted. Can I ask for a seconder, please? Thank you. Would you like to ask a question, Councillor Hollis? Tom?
Yes. Well, two things first. Obviously, I'm here representing the Ashfield Independent Group today, obviously substituting for Councillor Lee Waters. Yeah. And secondly, and I think this is probably the most appropriate item to bring this up on. In the last cycle of committees, in the last term of the council, we discussed possibly changing how this committee is managed. Obviously, bizarrely, at the moment, there's a number. How many employers do we have? 300 employers, yet only one employer is a decision-making body with the county council. And it surely would be appropriate for some of our bigger partners like the City Council and maybe districts and boroughs to also be represented as formal voting members with the pension. So I think as the chairman and the vice chairman and Councillor Camilleri, potentially might be something to look at going forward to give a bit more of an equitable decision-making share. And obviously it's not for today's meeting to discuss, but it's disappointing that the voting membership of this committee is still only the county council.
Thank you, Councillor Hollis, for reminding us and the point made. I think if you've read the papers, you'll see in the work programme that there is a review in there and it's due to come. We haven't got a time yet because the committee dates have not been finalised, so we couldn't allocate them to a date, but it is in there for later this year, I believe. Thank you. So any other questions or comments, please? No? Okay, then can I ask if we can move to the vote, and I'll take a vote by a show of hands, please, from the voting members. Those for? Thank you. Any against or abstentions? I don't think there are. Thank you very, very much. So that is carried. Moving on to item number 3, the minutes of the last meeting. May I ask the committee if the minutes from the last meeting are approved, agreed? Any questions or comments on the minutes? No? So
yeah, can I just make a point on the minutes?
Sure.
There seems to be a standard response to everything, that we note everything. Right? It does give the impression that we don't do anything. Because it occurred to me after I'd read the minutes, I thought, well, we've added no value as a committee because there's no change of decisions or anything. Now, I'm fairly sure that last time there were things that we asked to be discussed that particular item. And so there were actually some genuine actions.
Yes, okay.
So rather than sort of stamping out the standard response that no further actions are required as a direct result of the contents of the report, where there's any sort of that sense of activity, it would be useful to note it.
Okay, thank you, Graham. The issue with that is that some of the things that we did decide to do and agree to do are embedded in. There's actually a recommendation later on in the paper for that,
So,
and also they affected the work programme.
Yeah.
So they are in there, but you're right. Maybe we could look to
we're actually
improve.
I'll
ask the Democratic Service
quite an
Officer.
active meeting, but
Yeah.
it just gives the impression that we
Yeah.
just sit here like a lot of zombies and,
Yeah.
and say nothing. The officers tell us what to do,
Okay.
all right? And then we get these minutes.
Okay.
All right.
Can I ask if we can do that? Okay. Councillor Wheeler.
Thank you. I totally agree, Graham. In my own committee, that going forward, that's exactly what we're looking to do, is have action points. So when something tangible or substantial is discussed, there is an action point and a follow through, because it does give the impression, I agree, that not a lot was said, which is completely not true. But it's just the way minutes were historically prepared. I think gradually, perhaps we can move towards doing things slightly differently. An action point is a good starting point. Totally agree.
Okay. Point taken. Yeah, absolutely. Okay. Any other questions or comments, please? No. Okay. Can we just confirm that the minutes are approved then? For those that can vote. Thank you. Okay, that's carried. Moving on to item number 4, apologies for absence. May I ask Jo Toomey to go through the applicants, please?
Thank you, Chairman. We have 2 substitute members today. We've got Councillor Gordon Wheeler, who is substituting for Councillor Jonathan Wheeler, and Councillor Tom Hollis, who is substituting for Councillor Lee Waters. We've also received apologies from Sue Reader and Nottingham City councillors Sam Webster and Anne Peach.
Yeah. Okay. Thank you very much. Okay, moving on to item number 5, declarations of interest by members and officers. So do any members or officers present have any disclosable pecuniary interest to declare, please? Please indicate. No. Do any members or officers present have any private interests, either pecuniary or non-pecuniary, to declare, please? No. Okay, thank you. Moving on to item number 6 then, local government pension scheme, the pension administration performance report. I propose the recommendation set out on page 24 of the agenda pack that the committee considers the performance of the pension fund and the continued development of systems and processes that will improve the service to members of the fund. So I've moved that recommendation. Have a seconder, please. Thank you. And I'd like to hand over to John Clues to take us through the report, please.
Thank you, Chair. I'd just like to introduce myself to the new members of the committee. I'm Jonathan Clues. I'm the Pensions Administration Manager. As you can see, from the purpose of the report is to provide an update to the Pensions Committee on the performance of the administration for the financial year ending 31st of March 2021. As you can imagine, this has been a challenging year for the pension administration, along with maintaining the service by moving to home working. The pensions landscape has continued to set the fund challenges, from the introduction of the exit cap and then its suspension to the need for the fund to look to developing a response to the McLeod judgment. For the new members, the report highlights the main activities that the administration team undertakes and how the administration team is organised along with its resources. The report provides the cost of the administration for 2020 and how we are benchmarked against other funds. However, the 2021 data is yet to be finalised and included and will be included in our benchmarking with SITFA, and this report won't be available until later in the year. Data quality and improvement continues to be high on the pension regulator's agenda, and work is ongoing to improve our data, as we have seen a significant improvement in our common data, but a drop in our conditional data, which we hope will show an improvement once we are able to run our data reports in August and September, following the completion of our year end. This will then be ready for the pension regulator return sometime in September, October. The data quality report is also linked to our data improvement work stream, which we've brought previous reports to committee. The current membership based on the three main classes of members, totals 145,373 and is increasing. The current number of active employers is 292 and will continue to fluctuate as we work with scheme employers to consolidate member records. This is mostly related to multi-academy trusts, and I can report there are 2 projects ongoing to transfer a number of schools into the fund from other local government pension funds. These transfers should be completed by approximately March 2022. I've included a list of new employers and the type of employer body. I've set out complaints and employer disputes up until the 31st of March 2021. The most general complaints is around the calculation of benefits, ill health retirements, and a number of transfer cases. This year there have also been complaints raised related to one of our AVC providers, the Prudential. This has not just been a NOTS issue, but has extended across other LGPS funds. The Prudential have been reported and have self-reported to the pensions regulator. You will have seen, no doubt, some reports in the Sunday papers and in the financial parts of the papers about the performance of the Prudential, and they continue to have problems, but we are monitoring that as are other LGPS funds. The fund continues to receive subject access requests from claims companies seeking information relating to members who have transferred benefits out and subsequently lost their pensions due to possible fraud. Again, this is an issue across the LGPS and is being monitored by the LGA. We will be bringing a further report on pension scams to the committee and doing some further work. We are actually sending out a leaflet with the benefit statements this year, highlighting pension scams, and this is a leaflet that was produced by the pensions regulator. Concern was raised at the beginning of the pandemic that members of pension schemes could be targeted for fraud and pension scams, but we have produced information on our website, and as I say, we're sending out further information with the benefit statements, and all funds are conscious of this, and so is the regulator. In terms of our year-end activities, the report shows there has been a decrease in the number of accurate returns from employers by the deadline. I can report all returns have now been received, with 90% balanced and loaded into the administrative system. The remaining 10% have outstanding queries, which we are working with scheme employers on. Hopefully they will be completed by July so that we can issue benefit statements on time. The performance data shows 4 quarters of the completed processes against the SITFA KPI. Deferment calculations, as always, are a challenge, and we have certainly had difficulties with transfers as well, due to the number of transfers that we've been having over the last year, as members have wanted access to their pensions, hence the issue around pension scams. This year we've seen a reduction in the number of KPI processes completed. This has been mainly due to the difficult year, moving to home working. We did have a few difficulties in the first 3 months due to capacity in relation to the online systems, but these were updated and improvements made, and we've continued to process benefits. We've continued to have a lot of queries and questions from members throughout the pandemic year. The last part of the report provides information on member deaths. Member death processes remain a challenge. The processes this year certainly have been challenging. As you can see in the data, the fund has followed the national trends in respect of mortality. In in the report, I've compared our mortality against 3 years, but also we've commissioned the scheme actuary to undertake an evaluation of mortality and the impact of COVID on the fund. So we will be bringing a separate report on that in the near future. It's not actually on the work programme, but we will bring a report. So I'll leave the floor open to questions from members. Thank you very much.
Thank you very much, John. Interesting to see how the new employers portal is going. Are you seeing real benefits coming from that?
We've rolled it out to the county. So we did the pilot pilot. The county don't actually do a lot of processes through the portal, but we've now rolled out to Gedling. That started in May, and we've started to see processes come through. We spoke with Rushcliffe this week, and we'll be rolling the portal out to Rushcliffe and consequently to the other districts over the coming months. It's early doors in terms of its rollout, but we are expecting benefits from the transfer of data to the fund.
Thank you, John. Are there any questions, comments? Yes, Councillor Hollis.
Thank you, and thank you, Jonathan, as well for the presentation. And I think Councillor Carey beat me to one of my questions, and that's good for these. We're on the committee too long together to know what we're going to ask, I think. But my second point, and I think this is probably a benefit for new members as well, something the independent group was quite a big advocate for in the last term was improving staff capacity. And I think members will note on page 13 of our agenda, the fund cost per member is consistently around the £13-14 mark, which is substantially lower than other funds. And I'd suggest that's because we're a bit more well managed, not to toot our own trumpet. But that then leads to a concern on page, let's have a look, so if I was more organised, I'd be dangerous. On page 19 of the agenda, where we see some of our legal KPIs slipping. And I'll appreciate what you've mentioned in your presentation, that this year was a bit unusual, but we'll also note that years before we are consistently behind in a number of areas with legal KPIs, and it's a real concern for the authority, particularly when we sit so far down the league table with cost per member. I'd certainly rather see that closer to the £20 mark, see your team more resourced, and see 100% on every one of those stats. And actually, why can't we be completing it in 6 weeks rather than 8? You know, let's give ourselves a bit of a cushion. So if we do hit problems that we need to direct the team on, which we're all familiar with, you know, things that crop up, as well as the pandemic, we've got a little bit of a natural cushion anyway. So that's my concern, and I would urge the leadership in this committee to take that seriously, and actually let's pump some resource. And you're not going to get any complaints from the independent group for pumping more resource into the staff team that frankly clearly need it.
Okay, thank you, Councillor Hollis. We do take very, very seriously any requests for additional any staff and or extra personnel. We've done that through McLeod and other areas. We would need to understand the real figures hidden behind those benchmarks. It's not just the cost per member, it's whether or not other authorities have different numbers of members. So with the academy's growth and the extra number of members, that's going to force down, by the spreading of the fixed costs, that cost per member. But I'd like, John, will you come back on that, please?
Yeah, thank you, Councillor Hollis. Just to come back, and thank you for your comments. We are looking at additional resources, and there will be a report coming to committee either in July or September, seeking further resources for a number of projects and activities that we need to do. And I hope that that can be supported by yourselves and the chair.
Sarah?
Thank you, Councillor Hollis, for your question there. I think the other thing is it's not just about human resources, it's about business processes, it's about digital processing. And I think one thing that's been highlighted throughout the pandemic is the need to really progress our transformation and move to much more digital processing. It is something I have spoken about at committee before. Obviously, we do have a transformation programme running. I think the foundation to that is our data audit and improvement. And obviously, once we've come to the end of this particular phase of it, it's about the ongoing maintenance of data coming from scheme employers. So I think one of the things John and I have been talking about is some form of data team, so that actually we can monitor our data. If our data improves, the quality of that improves, then we can start to use functionality within the system to bulk process, so that we actually can take our experienced resource out of the pensions office and get them involved in the more complex cases, and the fundamental straightforward processing of things such as deferred benefits, when it's a straightforward case, can be done automated through the system. Thank you.
Thank you. Are there any other? Tom, yes, quick.
Come back. Yeah, well, I think that's really good to hear, and I think it's obviously with some of the bigger employers like maybe the city council, the county council, the police, fire, district boroughs, etc. It's clear to me that we need to improve our data transfer system so they can be doing it themselves. I mean, they've got some team members that understand how to do it, and I know that's something we're progressing. And it was really good to hear in Jonathan's report that others are taking advantage of that now, but I know we're just starting out on that process. But then I think, quite rightly, if we are doing less direct contact with either the firms or the members themselves, that then frees staff up to do the things that we want to do. Firstly, meeting these KPIs, but secondly, putting some of the more experienced staff, as Sarah made clear, into some of the priorities of this fund. And I don't think anybody would roll their eyes too much about saying that we probably need to get a very experienced member of staff to go through every single one of our investments with a fine-tooth comb to ensure that it meets our agenda. I mean, this committee has made very clear that we support the Paris Climate Change Agreement, yet there are hundreds and hundreds of investments that this committee makes that go completely in the opposite direction of that. I'll be speaking on that on later agenda items, but it's a little bit disappointing that we don't have a designated member of staff that actually is reviewing our investments to make sure it meets the criteria that you set forward, Mr. Chairman, and this committee has set forward for a number of years. And frankly, we aren't day-to-day experienced members of staff with pensions, but we have a basic understanding of the process and the investments we take. But it's clear to me that the officer team have got, frankly, enough on their plates with the day-to-day administration. You know, Jonathan's very clear on that. But we have a number of policies that we want to see taken seriously, and climate change is one of them. And I think it's something that this committee is failing on very badly at the moment. And me and you, Mr. Chairman, I know disagree on the speed of it, but even by your assertion, this committee should be further down the road than where it is. And if you're saying to me that we are signing up to the climate change and Paris Agreement and other things like that, why are our investments still not meeting that basic criteria? But we'll speak. Obviously, this isn't the agenda item to speak too much on that. But obviously, if we had a designated member of staff, we'd be further down the road.
Thank you, Councillor Hollis. I don't think you've added anything new in that second speech. We are managing. We have different teams managing different aspects of the business. Okay. Did anybody want to come back any more of that second question? I don't think there's any need. Mike, sorry, Mike.
Thank you, Chairman. Jonathan, once again, thanks for the report. Confused me slightly, to be honest, because your buoyancy exudes when you present a report to us, and because we've made strides forward and positive strides forward. So I see some dips, which I think any business would see, and that's what we're running a business here, we would see that. But you've completed answers which have proven that you're aware of them and address them accordingly. I just asked again that we are updated with any changes that we need to increase the percentages. I was a little bit confused on page 18 with 19 and 20 and 2021. Percentage of expected returns received by the deadline 88%, 88%. But we've got a percentage returns deadline of 60% last year and this year. I wasn't sure why that would have changed.
Yeah, I'll try and explain that, Councillor. It's what we try and do is we give a deadline to scheme employers to provide a return back to the fund. What we try and do is look at the quality of that data that comes back. So an employer might return their year-end report with all their data, but when we try and balance it, we have to send it back. So what we do is we report it as it's come in by the deadline, but the quality isn't sufficient, so we have to send it back. It's quite a difficult matrix to get a handle on. I can understand there's some confusion, but basically we report when they come in, and we try and report their accuracy, and then where we are finally with their actual report. So like I said, now we've moved on a month since I wrote this report. We've got all the reports in, so we've got 100% in. 90% have been loaded and sufficient for our benefit, but only 10% have had to go back to the employers because the quality isn't good enough. So that's the basis of it.
Okay, Mike, I mean, the key issue, Mike, there is that Mr. Clues is confident that we're going to meet the deadline. So all that hard work's being done, and we're on target. I think that's the fair thing. Just very quickly.
There are sometimes employers that finally we don't get information back for, and we will either, I call it a fine, we will either charge them for additional work that we have to do in terms of that data, or in fact, as we've done in previous years, we will report them to the pensions regulator. But we try not to do that, but that's what we can do under the regulations.
And I think that's a point well made, because it's our employers that are doing the extra work due to their failure. So if we can get that straight through, then the figures balance out even better. So thank you for that.
Thank you, Mike. Okay, I think there are no more questions or comments, so we've moved the recommendation. It's been seconded. I'd like to take the vote, please. Show of hands. Thank you. That's carried unanimously. Okay, moving now onto the work programme, item number 7, the yellow pages on your pack if you have a pack. The recommendation report on page 28 is that the committee considers whether any amendments required to the work programme. I formally move the recommendation. Thank you. That's been seconded. Do any committee members have any questions or comments, please? Councillor Hollis.
Thank you, Chairman. I'll anticipate your answer to this straight away before I say what I'm going to say. I know this is the new committee and you've got to work on the work programme, but I think it's really, again, disappointing to see that we haven't put any time aside to address some of the ongoing issues that the council are making clear are important in their priorities. We've made clear are important to this pension fund, yet isn't reflected in the work programme, and that issue is the climate change emergency. We aren't talking about some of our serious investments in this committee. I mean, Councillor Camilleri is obviously very experienced in this line of work, but why are we making investments in any company that invests in slavery? Why are we making investments in companies that are still doing fossil fuels, etc., and we're not even talking about it on the work programme? I don't want to keep bringing it up at every item. I want to have a designated discussion of where we can have an honest and frank debate about where we stand, which I don't think every member of this committee really recognises some of the investments we make. We have a very able independent advisor in William, but it's clear to me that he loves to gloss over some of the bad investments we make. Not only are they ethically bad, but they're also financially bad. And we need to start talking about it, Mr. Chairman, in the work programme and have a designated item. And it's disappointing to see that we aren't discussing it anytime soon.
Okay, you can see in the to be placed the annual review of climate risk metrics in our strategies. Tamsin, do you want to add anything to that, please?
Yes, I mean, we're about to embark on this year's review of the climate risk metrics, which will factor in the figures for the last 2 financial years, because it's shifted in the schedule. So we'll be able to do 2 financial years. So we'll be able to see what progress we're making, and that will come to one of the meetings in the autumn. Thank you.
And in terms of being stock pickers, we employ investment managers to manage our asset allocations. And part of that process is ESG and responsible investment. I believe the committee believes that responsible investment and engagement will produce positive carbon results in the long term. And to throw away that important work right now to disinvest could result in those investments going into the hands of others that don't have any care at all about climate change, and therefore would end up in a worse scenario. So it is very complicated. We're not here to pick stocks and to challenge it. We have investment managers do that who are employed to give the right returns, the right risk adjusted returns net of costs to enable us to pay the pensions of all our members, 145,000 members. That's the key point here, and I think the philosophy is that we've got experts in those companies that understand that, I think, far better than I would understand. That's not being political at all. So I think we've got the right strategy, the right policy, and we're moving in the right direction. I don't know if anybody else wants to add to that. Mike.
Thanks, Chairman. And I see the July the 29th response to the climate change is something that, if we're covering the last 2 years, is something that the detail will be really good for us to go through. Is that what we're saying? Yeah. On the 29th of July, we've got the funding, the climate risk review. Is that what you're presenting to us? Sorry, Tamsin, I put you on the spot. Sorry.
It's the review of fund strategies, Tamsin, that's on that one. That's not particularly the detailed risk analysis work. That's to do with some of the strategic wording in the policies.
That was a recommendation as a result of the climate risk analysis work, was to ensure that the work we are doing to manage our climate risk is properly reflected in all of our strategies. I don't think it's actually, it doesn't change what we actually do. It just reflects what we are already doing into the strategies better, because there's a lot of work that's going on that I think people aren't necessarily aware of. However, we were considering deferring that particular item until the autumn, because we are currently undergoing consultation on the funding strategy statement, because there are some changes relating to exiting employers. And that won't be complete to be taken into account before the July meeting. So as we last reviewed our strategies in October, it will still be about a year. So the suggestion was that we deferred that strategy review until the autumn, so that we could bring all the strategies at once.
If I can, I think that makes sense. I'd sooner have the full picture and understand it rather than half a picture and then change it a meeting or two later. So for me, if that's a suggestion, I would propose that, and I'm sure members would agree on that. I think I thought when you said about the 2-year plan, I thought that was something that was coming to committee, the overview of investment with climate change. Do you know when we'll get that at all? Because I think these two probably timing on each other.
We are expecting to get the report from Central back, as long as I can get all the data in time. We're expecting to get the data back from Central in September. So they'll then need to pull all the report together so they can present it to committee.
So potentially by the end of the year we could have
certainly before the end of the year. Yes. Okay. And it's difficult to predict an exact date, and we don't have the schedule for the meetings for the rest of the year, so we don't know when we're working to yet. Yeah, no, I've got no problem with that, so I'm happy with that. And just to reiterate what was mentioned earlier about the non-members in the committee having votes, I really would like to see a date put forward for that review to actually happen as soon as possible, so that non-voting members at the minute are aware
of a discussion and can make diary dates to make sure that they are here.
When we have the dates available, we'll put them into dates.
Yeah, and
so
I think it'll be, that's what I'm saying,
Yeah.
as soon as possible, I think that'll
Yeah.
be a really important debate to have. Thank you.
Yeah. But I think on the point that Tamsin raised about it's about terminology in the different reports and strategies, so they've all got to fit in and say the same message. It's clarifying and clearing all that up, that interrelationship of all those strategies. Yeah, thank you. Okay, so the work programme we've proposed. Oh, did you want to speak?
Sorry, I'm still slightly confused. First of all, yeah, I do welcome your commitment to look at the non-voting members. I appreciate that. Right. And we will keep pressing on it. Right. It's not something that's going to go away, so it does need to be examined. What I'm still slightly confused about is what we're going to get in the review fund strategy. Right. Now, I understand that what we shouldn't be doing is sitting here picking winners and losers and picking people who are more virtuous than others. Right. We're not in that position. We haven't got the knowledge. What I would say, though, is will this be an opportunity for us to set the parameters of the sort of investment we find acceptable and not acceptable? Okay, so we can then instruct the people who are operating on our behalf. Will be an opportunity in that to do that?
Can I just, before you answer, Tamsin, I think what we need to do, we've got some new members here. We've got old, I'll use the word again, old members and new members. We do need to be proactive in the work we're doing. So we need to get everybody to understand what we can and cannot do, what regs say we can and cannot do, what the raison d'etre for the pension fund is, i.e. decades and decades, years, pensions to be paid ahead, and what we can do in terms of our reaction to climate risk. And I think we can have working groups, we can have training, we've got training planned for this, so that process will enable us to improve the way we understand it and what we can do going forward, bearing in mind our raison d'etre right now is our fiduciary duty in the main to our pensioners. Okay, thank you. Is that we can arrange that, can't we, Tamsin? For that?
Yes, I think that would be really important.
Yeah.
But this review of strategies won't completely the idea is, because we had the working party in January and the decisions that have been made, the update to the investment strategy statement will just reflect the decisions we've already made to formalise those in our strategy, rather than look to set a completely new strategy. We will also be looking at all of the other pension fund strategies, so the administration strategy, the communication strategy, funding strategy statement, the risk register. So it's it won't be a detailed look at the investment strategy in particular. I think if we did want to review that before the next annual review, we'd need to schedule that as a separate item.
Eric?
We'll look at that, we'll consider it and come back to you.
Thank you. Can we minute that, please?
Yeah.
That you will consider it. Yeah.
Okay, Tom, is it a brief one, Tom, please?
As brief as possible, and I'm conscious we are talking about the work programme, so I'll keep it relevant to that. And Councillor Chapman made a very good point, and I think something I wanted to pick up on something you mentioned as well, Councillor Kerry. We don't want to be involved in the day-to-day investment decisions, which stocks we're buying, which ones, how can I say, but we want to set the parameters they sit in. And also, Councillor Kerry, you mentioned that we have a financial fiduciary duty, a legal fiduciary duty to our members, pension members. I believe we aren't meeting that fiduciary duty. And I also believe that the current strategy for particularly the environment and some of the unethical investments aren't meeting what this pension fund in good faith are suggesting we should do. And to be as very brief as possible, members need to be aware that we have invested in companies that are being investigated for child slavery. We are invested in tobacco. We're invested in the production of weapons alongside fossil fuels. I don't believe anybody around this table thinks that that is the right thing to be doing. And I also don't think that our members, the majority of our members, want their own money being invested in those things. And then to pick up on the fiduciary duty, and this is the reason we need to start talking about it in this work programme, we haven't met 4 out of the last 5 years of our own targets. So based on 2019-2020, our return on investments was minus 6.4%. Our own target was minus 5%. We didn't meet our own targets. And that's why we aren't meeting our fiduciary duty, and we need to start getting involved with the parameters of the stocks we invest in. And that's all I've got to say on this item. But the main point to be made, as Councillor Chapman made, as Councillor Pringle made, as I will make, this work programme needs to be more beefed out. And we aren't going to agree, that's obvious from the last term, but there is plenty we can find common ground on. And the very fact of talking about it is literally all we can do as opposition members. And you need to be aware that we are making bad financial decisions and it isn't ethical what we're doing. And I'll keep making that point, Mr. Chairman, and I know you'll roll your eyes and shoot me down every time.
And you will keep making those points, and I'll keep making the same point. This meeting is to consider the work programme that is in front of us. As a member of this committee, you have every opportunity at any time to approach officers and ask for work to be considered. Rather than coming here and grandstanding and trying getting things done, you could be contributing to the work programme on a daily basis, Councillor Hollis. Thank you. Okay, I'm not going to take any. Oh, Councillor Camilleri.
It's a question for Tamsin, really. I should imagine that climate change is high on your list. You can hear people grandstanding and saying things about it. But I should imagine that all the companies that you deal with, if I've got any experience with fund managers, it's on top of their list as well. Yeah. And they're working really hard to make everything fit in with climate change. And for us to sit here to talk as if we know better than them is a little bit concerning. And this person that Councillor Hollis would like to employ to overlook the funds to make sure that we're picking the right funds, how powerful would that person be? How much would you pay him to do that? I'm sure there's not a person out there that could do that. And I certainly wouldn't want one person looking after my money, let alone 145,000 people's other funds. So let's get real. We're all working on climate change. We're working really hard. It's taking everybody's time. And as long as we keep a close watch on you, I'm sure that your team will do an excellent job. And I think we ought to move on from that. Thank you.
Thank you, Andre, for those words, kind words. Thank you. Okay, so we'll move to the vote. Oh, sorry. I didn't see you, Sheila. I apologise.
It's okay. Can I just say, on years that I've been on here, I think that people that we've employed to do this work have done marvellous. Yeah. We've come away from tobacco, we've come away from oil as much as we dare, coals out at window almost. You know, I think we've done a really good job on climate change up to now. So we can only improve on it, can't we? And we've asked all our people to do this. So that's all I'm saying.
Thank you for those positive words,
Mr. Chairman.
Tom, no, you've said it. Tom, you've said it.
Point of order. My understanding of the Constitution, the Chairman doesn't have the right to overrule a point of order by a member. And the point of order is, and just to correct Councillor Place, our pension fund has currently £18 million invested in tobacco. And I'm sorry to correct you on that.
Yeah. Thank you for the point of order. It's well understood, and we have passive investments which have investments in all kinds of stuff. Tom, you're very well aware of that. Okay, so can we now move to the vote, please? Approve the work programme as amended during the discussion, please. All those in favour? Any abstentions? Any against? That's one against. It's carried. Thank you.
There was one slight variation that you.
Yes, it's recorded. It's recorded. Okay, so we're now moving on to item number 8. It's the Independent Advisors Report. And Mr. Bourne, are you there?
I am, Chair. Can you all hear me?
Yes, we can.
Right. I thought I'll start very quickly for the benefit of the new members, just to explain what my role is. I am your independent advisor, and I'm here for a number of functions. One is to provide advice, and that's because there is a regulation which states that this committee, when it makes decisions, actually has to take proper advice. The second is to provide challenge, and that's very much to your managers and other service providers. And the third is to provide a bit of context. because I advise 2 other funds. I also chair 2 pension boards, so I have kind of input into a number of ways a number of different funds and pools are operating, and that can be helpful again when advising you. Comment was made about whether I gloss things over. I have a reputation for calling a spade, and I think existing members will by and large support that. I appreciate that when I give advice, I won't please everybody, but I will do what I consider to be the best, give you the advice I consider to be the best for this fund. And just one very final comment is, no investor, whoever he is, will get everything right. We're always going to get some things right, some things wrong. We try and get things right looking forward, but when you come to look at it at the end of the day, looking backwards, you're never going to get everything right. And our job is to get much more right than we get wrong. Moving on to my report, I'm going to talk very briefly about what's happened in the past. And we've obviously had this huge stimulus from governments and banks, which has pushed equities up. And it is going to result in an economic recovery, which we're already seeing. That is not normal, but markets' reaction to it has been very much their normal reaction. You've had equities going up in anticipation of the economic recovery. And as it begins to happen, money starts to move from the financial world into the real world. And at that point, equities and bonds start to perform less well. And that's exactly what's been happening. What happens next? Well, the big worry right now is clearly inflation. And a lot of people are worrying that we're going to go back to sustained inflation. Not quite like the 1970s, but significantly higher than we've had in the past. I think in the long term, and I've said this for many years, inflation is the only real way out of the amount of debt which this government and other governments have ended up with. So I suspect there will be inflation in the long term, but I also think we're a little bit away from it at the moment. And I say that, so I think what we're seeing, the rise in inflation we're seeing at the moment is probably just a blip. The reason I say that is, first of all, there are major deflationary forces still in place. Technology is the absolutely obvious one. Secondly, if you look at what bond markets are saying, and they are usually regarded as the best market predictors of what's going to happen, they are factoring in about 3 to 3.5% inflation in the UK, about 2.5% in America. They may have got it wrong, but they are already factoring in that kind of level of inflation. So bottom line is, I expect over the next kind of year or two, I would expect equities to gradually peak out, bond markets to maybe rise a little, maybe fall a little, but not much to change. The fund is diversified. Over the last 5 years, we've been trying to diversify it away from equities into other assets, and particularly assets which give some protection against inflation. And I think that's the right thing to do, and I suspect we should carry on doing it. The difficulty is finding assets at the right price. So it's not surprising that there's a bit more cash than there normally would be in the fund at the moment, while we wait to try and find the right assets to buy. So with that, I'm sorry, I talked for slightly longer than usual. Let me open up and ask for questions.
Thank you, William. You all had the report before you. Any comments or questions at this stage, please? Okay, none. I don't see any. Oh, sorry, Graham.
Yeah. Well, I thought that was very sound, but what do I know? I'm a humble councillor. But it did. The question then is how we translate it into actions, or what are our strategy, and that is really, really important. And what is in this report, and I think it's a very wise report, but what is, I don't think William's been explicit enough, right? There's stuff in between, you need to read between the lines. It basically says that equities are not going to do as well as we expect. We're on a bit of a blip at the moment, a happy blip, but we need to start diversifying into other areas, and presumably one of the other areas is infrastructure, right? The problem then we have is that we were so overweight in equities, and there's so little opportunity in infrastructure. Diversification is going to be very, very difficult. And therefore, we're in a bit of a cleft stick. And so I'm going to ask William, how do you get out of the cleft stick? Thank you.
Thank you, Graham. We have been diversifying for 5 years. I appreciate that we are still overweight equities, and I was going to make the comment in the exempt part that in fact, one of my recommendations is that we move faster rather than slower to go from the current 61% weighting in equities, that's at March, back to the strategic target of 54%. The problem, as you quite rightly stated, is where do you put the money? We have around, I think from memory it was what 4.5–5% in inflation in infrastructure at the moment, and a target of 8%. So that is clearly an area to go into. You may wish at some point to discuss, I think we did mention it actually at the strategy review in January, moving to a higher infrastructure target. But the thought was that let's get to 8% first and then move to a higher target. So I think what you're saying is absolutely right, Graham, but I think we're already on the journey. Maybe we should accelerate it.
That is my view, and therefore, Eric, I would ask you, how do we accelerate it? Right? What steps do we take?
Tamsin.
And the other thing is, another question possibly for William is if equities are a bit fragile and the bond market is less fragile, do we then, and we are struggling to find places to put the money if we're trying to disinvest in equities, is the bond market a secondary option after infrastructure, given the fact it's difficult to invest in infrastructure to the same degree we need to? Thank you.
Yeah. If I can quickly answer that one, bonds at the moment are still yielding very low yields by historic standards, and the risk of investing in, say, gilts is that inflation, I'm wrong, inflation does take off and yields rise sharply, because then there'll be quite a substantial capital loss. So if we decided to put money into bonds, I would be arguing for very short duration bonds, which actually is something we did 3 or 4 years ago with the kind of short-term corporate bond portfolio with Aegon. One possible option is to put more money into that kind of investment. But I'm afraid, because of what's happened over the last 2 years, the premium you get for corporate bonds over cash is less than 1% at the moment.
Graham, okay. Tamsin, do you want to make a comment on how we can look forward, please?
Yeah, I will try. You've put your finger exactly on the issue that I'm struggling with on a daily basis, in that the things we want to invest in are really difficult to get money into fast. We are doing what we can. We have increased our investment in infrastructure, certainly our commitment to infrastructure just in the last quarter. So I'm hoping there'll be a bit more of a sign of progress once we get to the next quarter figures. But it is a very difficult challenge, and there sadly is no magic way to solve it immediately. It's going to take time.
Right. It would seem to me, Eric, that there's probably 5 or 6 different options, right? And it would be useful to know what they are in order to look at how we disinvest.
I mean, again, we could have a working group to look at.
That would be very helpful, because I think it's quite urgent, and I think I've got to say, William's right.
Yep.
Right. That's what's going to happen. All right, and we need to be fleet of foot and working group to do that. Could you stick me on it?
Yes, you'd be invited, of course. Tom, is it?
Thank you, and I appreciate William's advice. Obviously, other fund advisors would potentially advise different moves, and I'd always make that clear to new members that Williams is an advisor, not a decision maker of this committee. And I think something I find very bizarre and frustrating, and this probably picks up on some of Councillor Camilleri's points, and I appreciate he's a new member, but many of the points I made 4 years ago, and we're still talking about it. We haven't moved an inch closer, other than talking about it a little bit more, to divestment, to moving away from tobacco, to moving away from investment in child slavery companies, in moving from tobacco and fossil fuels, more importantly. We haven't made any progress in doing that, as some of the stats that I'll move on to talk about will show. Yet, Mr. Bourne, to use his own phrase, a bit more fleet of foot, can take us down from 65% to 54% in some of our larger investments. So why can't we take £18 million out of a firm that makes tobacco? Why can't we do that tomorrow? Why is it taking us 4 years, yet we can move 15% of the fund's assets within 12 months? I can't understand. I mean, my family, the fund I manage for my family doesn't stretch above 2 million. But the fund Mr. Bourne advises on is significantly more resourced. And the knowledge around this table isn't amateurish, it's more basic than others, but we have a basic understanding that it doesn't take 4 years to sell stocks and shares. And I think the thing we need to start talking about, and I'm really, this advice, it's bizarre that it stretches across, it's so simplistic. I'd much rather see a little bit more detail and meat to the bones, but it doesn't mention anything to do with some of the divestment. This is a strategy for this committee. And frankly, it doesn't mention the fact that we are underperforming. This fund is losing money with the investments we're making. And it seems to me that nobody wants to talk about it. We aren't meeting the fiduciary obligations based on Mr. Bourne's advice, which by his own admission isn't always right. And looking at the stats of the last 4 years, 4 out of the last 5 years, we have failed to meet our own targets. It doesn't seem sensible to me, Mr. Chairman, and I'm disappointed that the advice that we are looking at here doesn't make some of the basic points very clear. But I think the next agenda item suits close to some of my broader comments. But I'm disappointed as I usually am with some of these things.
Okay, I think to compare your own investment portfolio to this £6 billion pension fund portfolio is a completely bizarre comparison.
Point of order, Mr. Chairman. That wasn't what I've done. I think Councillor Camilleri made clear that people around this table maybe didn't know what we were talking about, and I think it's very important to see that you've got experience in this. Councillor Camilleri has, and a number of the Labour members, and Councillor Gardner, who of course sat for 4 years as the vice chairman of this committee, to suggest we don't know what we're talking about.
I'll make my own point of order.
Isn't correct, and that was the point I was making.
I'll make my own point of order. I'm quite able to respond in the way I did. What I said was correct. Councillor Camilleri.
Thank you. You keep giving me all this experience and all this knowledge. I'm surprised I shouldn't be asked to be a millionaire, a billionaire 10 times over. And the experience that you've got in investment is much like a lot of people have got. But I certainly wouldn't want them advising professional advisors on where to put the money. The reason you're not an advisor or a stock picker is for that reason. I don't know William very well, but I should think he's a very expert fund picker, fund manager. He knows a lot about things. It's our job to do what Graham does, to ask them the question, to put the faith, to say things. You can't just disinvest on something because you find out when you're trawling the internet, as you do, to find out where the money is. You've got £2 million invested in tobacco and then just take it straight out. It doesn't work like that. You talk in very simplistic terms. This is a very complicated, very, very complicated business that we're in, and we have to have experts to help us. Yes, I do believe in the next few years we'll be disinvesting all these companies, but it does take time. And we don't want to rush into it because people who rush into disinvesting lose a lot of money. And that's what this pension can't afford to do.
Okay, I think we've come to the, unless Tamsin wants to sum up there, please.
Can I just make a couple of comments? I think there's an issue between comparing our performance against benchmark and understanding where that benchmark may or may not be the best comparison for the performance of the pension fund investments. And I also think we talk a lot about divestment or disinvestment, and it's a term that I'm not sure we all have the same understanding of. I mean, in its most obvious sense, it just means selling a share, and our active managers will already do that if they're not happy with the investment prospects of a share, or they think the potential for growth on that share doesn't match the price, they will already sell it. So those decisions are already happening. I think maybe a better term for what people are talking about when they're talking about not investing in a whole industry sector is an exclusion policy, and we are not doing that because that is not the policy of the pension fund. We have a policy of engagement, not exclusion, on a sector-wide basis.
Yeah, absolutely. Thank you. As so do our investment managers, and with far more years of experience. Schroders, for example, have been looking at ESG for 20 years, something like that, I think, Tamsin. Yeah, thank you. Okay, Tom, if you anything to add?
I think actually it's not my job to educate members of this committee, and I wouldn't dream of doing it, but I think Councillor Camilleri made a number of misleading suggestions about what this committee is here to do, and I think it's important just to raise them. Mr. Bourne and a number of the professional officers here are our advisors. It's very important to make clear that we are the ones, the 9 members of this committee, are the people legally responsible for managing these funds. We make the decisions based on their recommendations.
No.
And we are the ones, as public custodians, elected public custodians, to manage this quite large fund. So I think it's slightly misleading to suggest that members of the committee don't know what they're talking about, as Councillor Camilleri suggested, and also to suggest that we should be led by their advice, and to suggest that research we do ourselves, which, you know, our group has members of staff. I'm capable of looking through documents myself, including reading agendas and reports, which all of my information is gathered from. And to suggest that it's inappropriate to raise it at a meeting is disingenuous, because members of this committee need to understand what we are voting on. And we need to understand that, as well-meaning Mrs. Rabbitt's suggestions may be, and Mr. Bourne's as our chief advisor, we are able to disagree with them. And to be very clear, I do disagree with them. And that's the points I've made during this agenda item. And I'll apologise that it does disagree with your agenda, Councillor Kerry, but I don't believe...
We are a committee, we make decisions, we do, and
correct.
Councillor Camilleri did not say that the decisions were made by the independent advisor at all. He mentioned what the strengths of the independent advisor and the other professionals that we have in the team and our investment managers have. Okay. So I think you may have misunderstood what Councillor Camilleri said. Thank you. Okay, so it's the first meeting. We've got a lot of new people here. Happy to listen to what people are interested in and to go forward and work as a team. Can we approve the work program, the independent advisors report, please? I don't think there's a recommendation, but I would like to recommend that we approve the independent advisors report. Can I have a seconder, please? Thank you. All those in favour, please. Any against? One against. No abstentions. Thank you.
Eric, there's an action point, right? You proposed a group to look at the investment portfolio.
Yes.
Yeah. So there's an action. Okay. Yeah. Thank you.
That will go through the work. Programme. Okay, so we now move on to item number 9, which is the fund valuation performance for Q4. Before I move on to the report, can I move the recommendations on page 41 of the pack, please, which say the committee approve a reduction in the allocation to the UK to 35% of listed equities, and that will be explained in Tamsin's report, and that members consider if there are any other actions that we need to take. And I'll ask for a seconder, please. Thank you. Tamsin, your report, please.
Thank you, Chair. In addition to the usual quarterly report, the committee also has an asset allocation decision to consider relating to the reduction in the allocation to the UK to 35% of listed equities. This reduction is in accordance with the recommendation of the independent advisor during the annual review of the fund's strategic asset allocation in January. At that time, the decision was deferred to the summer. After the strategic asset allocation changes already agreed, and based on the valuations at the end of March, the pension fund had 40.7% of its listed equities invested in the UK. So a reduction to 35% is relatively modest. The majority of this report is to inform the Nottinghamshire Pension Fund Committee on the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. The table in paragraph 8 shows the valuation at the end of March at the end of December and the value a year ago. The fund investments have increased by 134 million, which is 2.3% since the previous quarter, as the market has continued to recover. Within this valuation is 330 million of infrastructure investments, amounting to 5.4% of the fund. 6% of the fund is committed to infrastructure investments. Paragraph 10 shows a more detailed analysis of valuations by portfolio, and paragraph 12 shows the unaudited fund account for 2021 and the full year figures for last year. A new disclosure this year is a report on holdings in fossil fuel companies and the fund's investment in sustainable equities and renewable energy. There are a number of caveats that need to be understood in interpreting this disclosure, but it is an attempt to be more transparent about our investments and demonstrates the level of existing investment in sustainable equities and renewable energy. Over time, it is anticipated that fossil fuels will decrease as a proportion of the fund and that investment in sustainable equity and renewable energy will increase, but this long-term trend will not be smooth. At the end of March, we had an estimated investment of 135 million in fossil fuel companies, which is 2.2% of the fund, and sustainable and renewable energy investments amounting to 160 million, or 2.6% of the fund. It needs to be understood that the largest portion of the fund's estimated fossil fuel investments are energy sector holdings within the passive portfolio. The apparent growth this quarter is due to the increase in share prices. There was no change to the amounts invested. It should also be noted that the energy sector includes any renewable energy companies within the index, and that some oil and gas producers are also involved in the production of biofuels, hydrogen, wind power and solar energy, so have a renewables element. As a result of these two factors, the figure for fossil fuels is likely to be overstated and the figure for renewables understated. For this reason, this indicator does not provide the full picture of our exposure to fossil fuels, but forms only part of our risk monitoring. A more thorough assessment of our equity investments is provided by LGPS Central's carbon risk analysis, which assesses the carbon footprint and weighs in fossil fuel and coal reserves. The metric for exposure to clean technology is less informative in this analysis, as most of our investment in this area is through infrastructure funds, which are not within the scope of the analysis. The analysis undertaken last year confirmed that our carbon footprint and fossil fuel and coal reserves are lower than the benchmark and provided a starting point against which we can monitor progress. The sustainable and renewable energy investment figure contains more estimates. In addition to specific investments, an estimate of the renewable energy investments within the fund's other infrastructure funds was added. Not all funds identify this as a sector in their reporting, so this data is incomplete. Furthermore, because of the longer reporting cycle for unlisted investments, the estimate was based on both valuations and percentages from earlier in the year. So this figure can only be considered indicative, but is likely to be an underestimate. However, this figure is clearly increasing. The core index portfolio section reflects the equity market movements over the last quarter. There were no purchases or sales during the quarter. The Schroders portfolio shows the regional analysis of holdings and purchases and sales during the period. The benchmark change this quarter is due to the introduction of an allocation to global small cap, as agreed at the last committee meeting. The benchmark will change again following a second tranche of investment in this sector in the near future. The LGPS Central portfolio shows increased investments in emerging market equities and emerging market debt. Aberdeen have continued to actively manage our property portfolio under difficult circumstances. I'm pleased to report the sale of the properties in Tunbridge Wells and Banbury. The specialist portfolio shows the composition and valuation of the specialist portfolio and the transactions during the quarter. There were increased investments in listed infrastructure and the Aegon Diversified Growth Fund to achieve the strategic asset allocation targets agreed in March. The equity fund sale related to a smaller companies fund that has been reinvested through Schroders. The section on responsible investment activity summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Thank you, Tamsin, for that report. And may I remind members that we're still in the open part of the meeting, so questions, comments need to be of the non-confidential nature. So do at this stage, any committee members wish to have any comments? Tom?
Thank you, Chairman. Thank you, Tamsin, for your report. I'm always unsurprisingly going to be frustrated with the way you watered down some of those stats, and there's probably a slight Freudian slip in some of that, which I hope councillors picked up on. I seriously hope it isn't a long-term project to divest from fossil fuels in the way you made clear there. I'd always understood it to be maybe a medium term at best, but certainly a short term preferably. Because to be clear, we need to take action now. Not only we are Nottinghamshire County Council, we are a pension fund that's a public sector. We should be setting the example to other people to divest in fossil fuels, tobacco, etc. Why aren't we doing that now? And let's also be clear, this pension fund lost 6.4% on our return in 2019-2020. We are making poor decisions, and actually it's a traditional. I mean, I appreciate that I'm in my 20s and there's a generation above me currently making many of these decisions, but it's old-fashioned and no longer sensible to invest in fossil fuels. There are governments around the world are moving away from using diesel. I mean, of course, we were discussing, you just got yourself a new petrol car, haven't you, Councillor Smith? It's a sensible thing now to be moving away from those things because people in the country are going to be using them less around the world. I mean, with the COVID, we've shown actually, and the reason stock prices have dropped massively in fossil fuels is because people aren't using them. Yet, and I won't bore everybody with all the stats, but there's 10 companies that I would like looked at. And that's BP, who we currently have £8 million in, Shell, 24 million, Nestle, 4 million, BHP Group, 37 million, who of course will know mine coal and fossil fuels. A real emotional one, which I know Councillor Wards has brought up in the full council, members will be aware. Rio Tinto PLC. It's seriously disappointing that we are investing £28 million of our members' funds in them after they blew up a 50,000-year-old Aboriginal site to simply mine iron ore. And a number of companies, we don't need to go into others, but except probably the one to highlight to Councillor Place was this pension fund has £18 million in British American tobacco. A low amount, admittedly, but seriously, a big whack-off amount of money that frankly could be better financially invested elsewhere. But the bigger point is to pick up on our fiduciary duty, which in my opinion we are failing on, because immoral investments are one thing, but doing the right thing financially is another. And frankly, at the moment we're in a beautiful place where both can be pointed in the same direction. It is financially better to be investing in environmentally sensible companies. Not only are they more eligible for more loans, more companies are looking at them now. The very fact that we're talking about them and others are drives their price up and the investment's fantastic. But ethically, it's the right thing to do as well. So as part of this report, and the stats bear it out, we are making poor decisions. And we need to start recognising that before we move on. And I was sat here only last week in the Transport and Highways, the new Transport and Environment Committee, should I say, which has a slight overlap to some of the things we talk about here. And the Conservative administration was very quick to remind us that we are under a new leadership, a new personnel, and somehow the last 4 years or however long didn't exist. We need to recognise what we've done wrong and doing wrong before we can move on. And I welcome the fact that we need to talk about it more, but seriously, we need to recognise that we're in a bad place here, financially and ethically. And we have a chance to turn the corner under this new leadership that we now have. And the County Council has 100% of this voting reps on this committee. I was disappointed to see you sideline Councillor Garner, who was in a good place to take some of this agenda forward. But of course, I know you don't agree, but we need to start looking at it now. And I know the Labour group are on a similar wavelength, but the fact that we have some of this money invested badly is seriously wrong. And that's all I have to say.
Tamsin, would you like to respond? I think, okay, I mean, the key issue is the fundamental issue here is, in my view, and I think I understand Councillor Hollis's point, is that he believes that divestment is the solution to a number of issues globally. And some of what he's saying is right. The facts are there. Yes, there are companies producing CO2, there are companies destroying stuff. But the point is, and I think if we can highlight some of the responsible investment successes that have happened, and recently with ExxonMobil, with Rio Tinto actually, and others, where voting at board at AGMs has changed the philosophy of those, or will change the philosophy of those companies, and so I still believe that responsible investment and engagement will produce a better result for climate change and other issues, other ESG issues. The companies we work with have been doing this for a number of years, and they recognise that good ESG, embedded ESG in companies, does produce a longer term improvement in returns. I believe that's the case, and please correct me if I'm wrong. That's what our companies think. So I think the fundamental issue, Councillor Hollis, is that you have this divestment bandwagon that you're on, where that's the only solution. It's not the only solution, and it's actually not the best solution. Tamsin, do you have anything to add to that, please?
No, that was very well said. Thank you.
Thank you. Any other questions or comments, please? Mike.
Thanks, Chairman, and thanks, Tamsin. I appreciate the report, and you've actually, the report should have come at the beginning for me, because, you know, we recognise that equities is going to be an issue. You responded within this paper. You recognise that we've got 135 million in fossil fuels, and we're expecting to diverse from that. I would like to see a drive rather than expectation to do that, and if that means stronger engagement from us in some way, I think we should do it, and that's, I think that's for us all. That's nothing that we can't do. We can ask the question and continue to ask the question, which I think Councillor Hollis has raised some issues which probably do need addressing, and these companies that are listed with issues that they're the companies that we should be talking to on a more exaggerated timescale, to be quite honest, if that's possible. I'd like to see a utopian world. However, I think we all recognise that. Yeah, no, it would be. However, I think we recognise that that's not going to be in it. And as much as there's division between, you know, there's division on the floor anyway. I think the end goal needs to be, or I think the end goal is the same for all of us. And I think there's a push and a drive that we could be more active in. And that in itself will be recognised. That's Alice. But I think the report is brilliant. You've ticked every box, Tamsin, to what's been raised previously from William, who I think does an excellent job and is somebody that I've phoned up and challenged and responded accordingly. So I have no issue with William at all. I do. I think we need to move, as the first meeting, we need to move away. If we are going to be unified, you know, the pointing the finger, let's stop that now. You know, the divestment and the ecological factors that primarily we're talking about are bigger than all of us, no matter what colour we are, or what position we are in Nottinghamshire. And if we can work together on that, responsibly, but aggressively, then I think will be a pension fund that should be recognised across nationally, to be quite honest. So yeah, that's where I'll be with it. Thank you, Chairman.
Okay, thank you, Mike. Any other questions or comments, please?
Chair, I had a comment.
Sorry. Oh, sorry, I didn't turn around and see your raised hand. I do apologise.
Sorry, it's a very quick comment. Just equity markets do go up, do go down. Councillor Hollis correctly referred to the fact that in 2019-20, the fund lost 6%. That was largely because equity markets went down very sharply. You can see from the data in front of you that over the last 12 months, the fund is up 22%. And the real point is, over the long term, are we delivering the return? And we have.
Thank you, William, for reminding us of our success over the last year, even though the success was a reflection of the poor markets of the year before. Okay, Graham, sorry, it was you, wasn't it?
I was
Yes.
rudely interrupted by William, but never mind.
I think his hand was first.
I'll defer to my better, if not elder. Right, okay. I think we're polarising this too much, right, between engagement and disinvestment. And it seemed to me that if it looks as though a firm is actually not engaging properly and there is a potential for losing money, because if it doesn't engage properly, then we should be willing to say we will disinvest. And I think that's what we are saying. And I think that needs to be clear, right? So it means it's actually quite granular, because very often it's in our interest, A, reputationally, and B, often reputation, finance follows reputation, to say, oh, enough is enough. On the other hand, I understand the engagement issue, and that is why I've been very keen to look at voting records and voting patterns, and I've actually been quite pleased with what I've seen. I never expected our engagement on as shareholders to be so active, and so I'm going to keep an eye on that in the future, and we're getting good reports on it. Although you've got to spend a lot of time on the web, right, to get to the bottom of it, and life's too short. Having said that, I would welcome looking at some specific firms, right, but with a very circumspect eye, right, to say the degree to which we can use our influence versus the point where we say, actually, we just got to give up on these people. I mean, for example, child labour would be something if they decided they weren't going to respond, then we just need to get out for reputational purposes. And we're only going to do that if we get down to a granular level, right? The problem with the granular level, of course, is it's arbitrary. We've just had a list. I mean, I could also say, well, what about cement works? I mean, cements, right? Concrete, right? What about people providing plastics, aniline, right? You can go on and on and on. Nevertheless, I think it'd be useful to start somewhere. So I wouldn't mind looking at a particular list. I think it would also last a few boils, right? So that's my general point on that. Right? I think we're unnecessarily polarised, and I think and the real issue is pace, right? He wants it tomorrow, we want it next week, you want it in a couple of months, right? So we'll have to come to some agreement. Now, we then get on to the report itself. What I found interesting was that we've got really good KPIs, right, and comparisons and sit for comparisons on the administration, right? Very impressive, all those. We then get to the performance of the fund itself, and the KPIs we've got are really crude, right? And they are our own benchmarks, right? And we set these benchmarks, don't we? We sort of stick a finger in the air and come up with a benchmark. Well, it's not quite as crude as that, but it is. And I think even earlier somebody mentioned it was a bit arbitrary, right? And I think there's a danger that we sort of create a problem for ourselves. And what would seem to me, and somebody tell me why we can't do it, we should need to be benchmarking ourselves against other pension funds, right? Right, and William is going to tell me why we can't do it. In that case, William, if you're going to tell me why we can't do it, you tell me what we can do, all right, in order to get better benchmarking, because what we've got is not. And then, as a consequence of not having that benchmarking, we're getting, accusations that, oh, you're underperforming, right? And actually, the only way you're going to, if the market's underperforming, we're not King Canute. We're not going to be, well, King Canute wasn't very good at it. We're not going to be able to turn the tide. So how do we benchmark our performance so we get a really clear view, so we don't get arbitrary insults about our underperforming? Right. William, over to you, but I'm not chairing it, you are.
You aren't, and through me, Councillor Chapman. William, would you like to comment, please?
Yeah, no, thank you, Graham. I understand where you're coming from completely. Peer group benchmarks, you go back 20, 30, 40 years ago, and they were used much more widely. The problem with them is that there is a consensus, and you end up ending up in exactly the same place as everybody else. There's absolutely no guarantee or reason why that consensus should be right. I think the benchmark, some areas, some asset classes, you can find a pretty good benchmark. For example, equities, you have the index benchmark, and that's the right thing to compare performance against. Bonds is a bit more difficult. Areas like private equity, private debt becomes really very difficult. And therefore, we tend to kind of benchmark against cash plus a certain amount. Maybe we should actually take a step back and take a look at what the underlying purpose of the fund is, obviously to pay pensions, and it actually gives us a target return. Ultimately, the combination of our investments needs to deliver that return. And that's what really matters to us. The reason for looking at equity benchmarks and other benchmarks is more to see, has the manager done a good job? But I would suggest that for this committee, and this may not quite answer your question, but the right kind of benchmark to look at is actually, are we delivering our target return over time? And I think it's very hard to get more granular than that for a lot of investments. A few, like equities, you can, but most you can't. I'm sorry, it's not the perfect answer, Graham.
So can we do it, Eric?
Well, I mean, the issue is, of all the other LGPS pension funds out there and others, whatever it is, we're all at different levels of funding. Therefore, the actuaries give us all a different target return required to get to 100% funding and more, so that we can pay the pensions in the very, very, very long term. So, and different funds are different sizes. In LGPS, for example, we're one of the mid-sized funds. There's some really big ones and there's some small ones. So where you can get good comparisons from, and I think William is right, is you might find the odd one, but that doesn't mean they're doing the best or better. There's lots of, and we choose our own different asset allocations to meet in our diversified portfolio. So I think it's very complicated.
I've accepted defeat on that as soon as he shook his head.
Yeah.
All right.
Yeah.
Okay. I know, I'm not going to fight battles I'm going to lose.
Okay.
Right. But I am asking for something clearer than what we've got.
But we can always take a look to see whether we think our benchmarks are still appropriate or there is better. There's nothing to stop us doing that.
And I think that might be appropriate. Last time I looked at it was about 5 years ago, so I'm more than happy to have another look at that.
Yeah. Okay, that's great. So another action point for you, Graham. Very good. Very good. Thank you. Are there any other questions or comments, please? No. Okay, that's great. So we've moved and seconded the recommendations, and which includes, and I must reiterate this, which includes the move to reduce the amount of UK equities to 35%, which will reduce our investments in fossil fuels in some way, and also the other actions we've already agreed. So all those in favour, please. Anybody against, please? Councillor Hollis' part hand raised. And no abstention. That's carried.
Can I just point out to Councillor Hollis, right? It's quite important. We've just agreed to reduce down to 35%.
He disagreed with it.
Yeah, we've just agreed.
That's fine.
Yeah,
I think he understands that, Graham.
The implication of that is that the UK investment is probably overweight in fossil fuels.
Yes, he's just voted against it. It's too.
No, I know, but I don't think he's understood what he's done. Right.
Graham,
for a point of principle, what you've done is actually gone in the opposite direction.
Absolutely.
All right. Graham, I think the Chairman,
we really don't need a debate here. We've made a decision. We've got some people waiting for us out there to help us move forward. Can we move on, please?
Well, Chairman,
that's fine. I'm now going to move.
Chairman, I'd like to come back for a personal clarification, point of order, and I understand that you're not able to...
Point of order, I'll accept a point of order if it's short.
Very short one. I think, Councillor Chapman, I really respect you, and I know, frankly, we agree on a lot of things within this committee. I voted against it because I don't agree with anything in the report. And I think the independent group strongly disagrees with the direction of this committee. As I've shown in this meeting, I will vote in favour of things, but frankly, I cannot agree to doing any sort of move that agenda item suggested, and that was the reason the independent group cast our vote against.
Thank you, Councillor Hollis. Okay, can we now move on, please? We're going to, for the exclusion of public, it's item number 10, So in order to be able to deal with items 11 and 12. So I therefore invite the committee to resolve that the public be excluded for the remainder of the meeting on the grounds that the discussions are likely to involve the disclosure of exempt information as described in section 12A of the Local Government Act 1972, and the public interest in maintaining the exemption outweighs the public interest in disclosing the information. I've moved that. Can I have a seconder, please? Thank you very much. And can I have a show of hands for the vote, please? All those for? And that's carried unanimously. Thank you very much. And I'd like to can we also invite Mr. Bourne back into the meeting, please? Everybody happy with that? Thank you. Thank you very much. Okay, we're now.